Hello everyone, this is Bella. Welcome to my new series of price behavior teaching video sharing. Today we begin to learn the reverse form of learning. This video is mainly theoretical class after practical case teaching. Some of my new friends who are more practical than theoretical, which I don't think is right. Theory is the foundation of everything and helps us understand the logic behind the perceived price movement, and I think it's much harder or impossible to do that if you don't have the foundation. This video takes a lot of the original words from the book of ABU, and I think it's done a good job, and I'm just going to take it and add a little bit of my interpretation. Let's start with a question: under what circumstances does a definite trend reverse? The answer is simple: only when enough homeopathic forces close out or stay out of the market, that is to say, the trend is not strong enough, coupled with the emergence of a strong counter-trend force, can a general trend end reverse occur. When we talk about homeopathic forces and contrarian forces, we talk about major forces, and only with their size can they actually influence the market. We all know that at the end of a bull market most of the main players have long since stopped buying, and it's the small retail investors who come in like crazy and chase it up like crazy, even though there are people who keep buying, but the power of those retail investors is not driving the real trend movement, and it's usually a high tide reversal that catches everybody. In fact, it is easy to understand that when a definite trend is formed, there must be a major fund behind the continuous promotion. Since so much effort has been spent to make a trend movement by virtue of the right time, geographical conditions, and people, then the trend party naturally needs to push the trend to the extreme before they can consider stopping and leaving the field. If the strength of the homeopathic side is insufficient, if there is no strong counter-trend force or only the entrance of the counter-trend force, and the homeopathic side does not give up resistance, the market is likely not to have a reversal, but to enter a shock range, and the main bulls and bears to regame to determine the future direction of the market. A lot of trend reversals are caused by a failure to break out of the trend, because when the price goes back to the correct pattern and then breaks out of the trend direction and then fails, that's an indication of a lack of energy in the trend, and we've talked about this many times in the previous videos. Common market reversals, such as bottoming, and ultimate bottoming, can be interpreted as failures to break through. One of the most important skills a trader can master is the ability to accurately determine whether a breakout has succeeded in leading to a new trend or whether a breakout has failed and caused a reversal. The breakout is not limited to a horizontal level, but could be a channel line or other support resistance structure. Let's recall that at the beginning of my video series we used an example of a Bitcoin daily line that was a wedge reversal from a breakout failure, and I'll mark it again and go through it again. We have seen the previous good bull trend run to the end of each pullback in the trend direction of the breakout without a new bull to follow. The strength of the breakout has failed, and these two consecutive bull flush breakout failures have led to a wedge reversal. The same is true of the subsequent reversal when Bitcoin went down to 30,000. What about this decline? It's a downtrend on a small period. It could be a large range on the daily line. So let's take a look. Let's cut off the last one and move to the 4-hour level, and we can see that at the 4-hour level it starts down from the high, and it's already a short trend, but this short trend, let's see how it ends, and it's also a short trend which is a false breakout of the trend shorts. This marks a false breakout for the shorts and a lack of short energy that brings about a short reversal. The nature of many reversal forms is such a failure to break through. You can find some of your own review. Trend reversals in various time periods occur at support and resistance levels, because both technical and procedural traders view support or resistance areas as signals for them to take profits. Many even begin to trade backhand in these areas. Fundamental traders among institutional participants also watch for obvious technical signals. They view key support and resistance levels on the chart as value ranges and trade backhands in those ranges. Value trading programs also pay attention to these areas. Regardless of the criteria used to measure important support and resistance levels, it is important that the whole market sees a significant level when it occurs, regardless of the logic they use or the tools they use to trade. So let's look at the example of a Bitcoin diurnal reversal. where Bitcoin is stuck around 60,000. How did the 60,000 level come from? And it's probably a psychological target, where the people who bought at 10,000 have gone up 6 times to 60,000, and the people who entered above 20,000 have tripled. That's right, here in the first rise of the main push wave after a pullback you double the entry from 30,000 to 60,000. So the 60,000, it could be a psychological target, it could be a technical target, which means it could be a simple technical tool that we commonly use to measure a trend pushing the target. Let's say AB is equal to CD, and we found that it's also around 60,000, or if you look at some other points it's about the same, or if you use any of the other trend target tools you should also be around 60,000 and you see a significant resistance. It doesn't matter what kind of logic you use, right? Yes, a lot of people can see that 60,000 is an important value area, and then the Bitcoin decline that goes down to 30,000 will reverse as well, and that 30,000 level is very simple, and we can see that it's the starting point of the most recent major upswing. So let's just draw it. So this is a level that a lot of people can see, and the players on the floor are looking at this price level. Most trend reversals occur at these key support or resistance levels. A successful trend reversal can turn a bull market into a bear market, or a bear market into a bull market. But the most important thing to remember is that most trend reversals will come to nothing. We often talk about the inertia of market movements and the tendency to maintain the current state of movement and not to change easily. That is to say, there is no such thing as a trend reversal pattern. When the market is in a trend pattern, all patterns are continuous consolidation patterns, that is to say the ultimate pattern, but occasionally a sustained pattern will fail as a sign of the exhaustion of the tide. Most technical analysts would define a persistent pattern of failure as a reversal pattern, but most of the time these patterns do not cause price reversals. Continuing with the example of a double top/shoulder top/bottom reversal pattern. I love to use this example because it's a pattern that a lot of people who are new to the game fall over. Most of the double top, head, shoulder, top, bottom patterns that we have in actual trading cause not reversals but trading bands, and indeed a lot of these reversals happen when trends reverse, but that doesn't mean that the market tends to reverse. The logic that it doesn't hold up just because most professional basketball players are tall doesn't mean that if you're tall you're going to be a professional basketball player. It depends on a lot of other factors like your athletic ability and training and so on. So this is an example of a fairly standard head and shoulder pattern. And we see the head and neck line of the shoulder here where the big negative line has broken down a lot, and the neckline of the steeple pattern is what the textbook calls a breakthrough entry position. This head and shoulders pattern holds, but what we see later is that instead of a reversal, the market trades in a broad range and becomes a trend continuation pattern. A wave of trend is like a giant ship, which needs great power and time to change the direction of the giant ship before the main force of one party controls the market. It usually requires an increase in two-way trading volume. This phenomenon of long and short anxiety is manifested as the shock market, so most of the reversal forms are the shock range, but because of the 80% probability of reversal forms will fail, so the probability of the interval breaking is higher. Sometimes there's a contrarian break or a contrarian break that quickly fizzled out and the price reversed. When these things happen, most traders will label these swings as reversal patterns like this double top bottom head shoulder top bottom or end deformities. Most of the reversal patterns that can cause a reverse trend that I'll talk about in the video, but at the same time they may just cause a swing. Then it is likely to revert to the original trend, in which case the reversal pattern is just a finishing pattern in the trend. There is a very important rule in making a reversal trade that you should never consider a counter-trend trade before an important trend line has been broken, and you should only make a reversal trade if there is a strong signal K line. You need evidence that the counter-trend is strong enough to take the opportunity to control the market. Even so, you should still look for opportunities to trade with the trend, because after the first contrarian wave, the market will most likely test the extreme value of the original trend and try to return to the original trend. Only in rare cases will the break of the trend line be so strong that a timely test of the original trend will continue the contrarian move. Let's look at the case where there's a very clear uptrend in the market and then this major uptrend line that I've labeled, and you shouldn't even think about shorting until that breaks below this important trend line. If we look at the price and it breaks this uptrend line, and this big break is still a test of the original trend extreme, that's the rise of the rally. Most of the time reversals have a test of the original trend extreme, so we don't get involved in shorting at the first reversal point. For example, whenever the uptrend line breaks, you get directly involved. There are technical analysts who call people in when they're teaching them to trade. But you know from listening to me now that entry often traps you. Only in a few cases does a break in the trend line directly trigger a reversal or not a retracement. Why is it that such an important trend line break or most reversals have an extreme test of the previous trend? Because only if the price has failed twice in the vicinity of the previous trend and has failed twice to challenge it will the market try to do the opposite and try to make a contrarian break. A breakout of a major trend line is a condition for a timely test failure of the previous trend, and the last condition is a contrarian breakout because the first two conditions are evidence of the bull's lack of strength and nothing more, and the last contrarian breakout is a sign that the contrarian side dominates the market. So, if we look at the level of this pre-band low, and I've drawn it as well, it's when this band low is breached that the historical side is dominating the market. We generally think of a reversal as a bull market to a bear market or a bear market to a bull market. However, the behavior of the volatility range can also be regarded as the opposite of the trend behavior. If a volatility range breaks into the trend or the trend moves into the volatility range, it can also be regarded as a reversal of market behavior. A pullback in a trend can be a mini swing or a mini trend that goes against the general trend known as a pullback. When a correction is over, the mini trend reverses back to the original main trend. Most trend reversals are trend retracements over a larger time period. It's a reversal pattern at the arrow on the 1-hour chart, but it's a very vague reversal pattern, and anyway the price has reversed here, but if we go to the daily line, we can see that the reversal of this little cycle is just a correction on the big cycle. Most trend reversal attempts result not in a strong contrarian trend but in a range-bound move. Traders never know in advance whether the current reversal will lead to a new one, because a range-bound reversal often looks the same as a reversal into a new trend for the first dozen K lines. Let's continue with the case of the Bitcoin daily wedge triple push reversal. It's only when the price breaks down the band level at the beginning of this wedge that we know the reversal pattern is in place. If the market is supported at this level and it makes a lateral move, it's perfectly fine. So before prices go down and create a contrarian breakout, that's the vertical line that I drew, we don't know whether this contrarian breakout is going to be successful or whether it's going to create a new contrarian trend or whether it's going to create a sideways range. And only after the market has been running for a long time, we'll be able to tell whether this reversal is ushering in a new trend or simply transitioning into a choppy range. That's why most deals with very high break-even ratios have low win rates to begin with. Continuing with this trade in the picture, where is your best entry position if you do the reverse of this wedge 3 push? Then break ahead on the third push, the price pause makes an in-wrap pattern and you go short when you break in this in-wrap pattern and your stop loss is about $4.000 and your profit margin means that you think this reversal pattern is going to hold and your profit margin is probably close to $30,000, so that's a very high break-even ratio, but your win ratio is very low. Why did we just say that you don't know whether the reversal pattern has been successful or not until the price has actually caused a contrarian breakout? So you are very vague at the beginning of the entry position and the win rate is very low, and when the price has caused a contrarian breakout, let's say we break this earlier band low. Break this low when the price makes a contrarian break and your reversal is confirmed by the market, but when the market confirms the reversal pattern and you enter again, you find that your profit margin is already very narrow. So as the trend gets clearer, the success rate of the trade gets higher, but the margin for profit gets smaller and smaller, which means the profit/loss ratio decreases. Whether the reversal turns into a new strong contrarian trend or just a few big contrarian moves, the way a trader trades a reversal is the same. If a reversal pattern quickly leads to a contrarian break, the trader can make a huge profit from the new trend. As we saw earlier, the profit margin is very high, but even if the market just moves sideways, and there's a big swing range and that's the way it goes, traders can make a lot of money just by trading that range. For us to trade, we do what the market gives us, and we don't have to pray that the market has to work in a certain way. And that's one of the mistakes that a lot of people make in trading, is that he has to make the market do what he wants to do to make him happy, and if the market doesn't do what he wants to do, he doesn't know what to do, and that's not the right thing to do. As traders, we do what the market gives us. Finally, let's just briefly talk about some of the most common patterns of reversal behavior in the market. The first one is the major trend reversal, and this is a term from ABU. The major trend reversal is very common in the market. The double top and the head and the shoulders top and the bottom is a variation of the major trend reversal, and we'll illustrate it with this example. The first thing it has is a big break from an important trend line, and I've drawn a trend line here where there's a big break from this uptrend line, and the second thing it has to do is test the original trend extreme, and the market is giving it. It's a test of the upper extremum of the original uptrend, and this test could be higher, or it could be parallel, or it could be lower, it doesn't matter. The important thing is that what we see in this test is that the force in the direction of the original trend is impotent. Just take this uptrend, and if this test doesn't hit the previous high, it's simply impotent, because the high has been lowered. So if this test is parallel to the previous high, then it reverses, which means that the trend direction is weak, because it can't create a new trend extreme. And if it breaks the trend extreme and reverses, it is also weak. Why is it a breakout? Because it breaks the trend extreme and there is no new trend following force, so it is a breakout lost. The failure was like the way the price came back, and that was the second test of the ultimate trend, and the third was a break against the trend. So behind that we have shorts that know the history of the market, that know the market, what we call a double top / bottom reversal pattern, and it's very simple. It's one of the patterns of a major trend reversal. That means it's a timely test of the previous trend, that this point is basically parallel to the previous point. So we can see that it's a double top / bottom. So what's a head / shoulder top / bottom? Continuing with the example in the diagram, we see that this test has a false break of the front high and then the airdrop, and it controls the market. So if the price goes up from this water level up to the extreme of the front trend and then does a reversal, let's say he gets here, then this point, what it represents is what we call the head shoulder top bottom pattern. The right shoulder, it is the second entry point of the failure of the breakthrough. I do not know if you can understand me. In the future, I will explain these in detail in the following cases. The second is the climax reversal, which is very familiar to the friends of the currency, is very common in the stock market. This pattern of reversal is more common in all commodity markets. It is an extreme release of market sentiment, extreme fear, or extreme greed. This pattern of reversal is characterized by the fact that it rarely tests trends in a timely manner. So let's say the case in the picture is March 2nd, which is March 12th, 2020, and for those of you who are in the currency market, that's a date you can't forget. We see this very long negative line that could have been a financial avalanche, and this is what happens when the market is in a panic and the reverse of the panic is not tested in a timely manner. And this kind of high tide reversal often happens at the end of a bull market, especially with stocks and currencies, and especially with currencies. A lot of friends in the end of the bull market see that the positive line is getting longer and longer, then he would like to buy crazy to sell the house, to catch tide in. He felt that if not to buy, it will be empty, but often the very long positive line, it is a high-speed reversal, because a lot of greedy participants continue to enter. When everyone has already bought, there is no further buying power, there is no new buying, and only the selling price in the market naturally falls, and that's very understandable. And the third one is the three-thrust wedge reversal, which is also very well understood. The trend direction in this case continues to be Bitcoin. It's bull market, and the upward wedge is a kind of high tide performance. How do you understand that? As far as we can see, this is very normal, and there is no problem in this pullback when there is a false break in the trend direction. In fact, when this false break appears, the market has shown that the strength of the bulls is temporarily insufficient. It should be adjusted for a long time to gather strength again and make a breakthrough. But what we saw was that instead of a deep pullback after the fake breakout, there was a new buying force that was a lot of irrational buying force, and it was followed very quickly by a new breakout a new breakout that was also a failure of 2 consecutive trend breakout failures. If there was a counter-trend breakout, that would be very negative for the trend. There's also a reversal pattern called end flag reversal. End writing is also common in the market, but it's hard to master. I still can't trade it, so for you to just know that the market has this motion and don't freak out when it happens. What does end deformity mean? We see a downtrend ahead, that red arrow is a 2-stage pullback, and after that pullback pattern the trend is the short side continues to break out, but this time the short side doesn't go very far back and we see it has a false break out of the premise, so the red arrow is a correction flag for this downtrend, this pullback flag for this last leg of the downtrend, so it's a terminal flag reversal. There are a lot of reversals in the market that come out this way, but it's really hard to get a handle on it, and it's really hard to see what's going on, and it's always going to go wrong, so you just need to know what's going on. Okay, so that's it for today. There are some other reversals that I'm not going to talk about because they're rare and they're hard to trade. For example, this kind of extended inversion is really hard to do, so we're not going to talk about it at the beginning of the next video, and we're going to talk about some of the examples of reversal patterns, but personally, I never do reversals. I only do reversals to small cycles. I only do this type of reversal to a big cycle trend or look for patterns at the top and bottom of the range and for a major trend like the current level where there's a moving average and a clear trend because it's really low win rate and it doesn't fit my trading style. I also want to say that this channel of YouTube is the only channel that my video was released recently. Some friends in the group pointed out that someone carried my video in the B station in the mainland and charged everyone to pay attention, not to be cheated. So today's content have come to an end. Thank you for watching. Please consider like, comment and subscribe. Also don't forget to follow us so you watch the following updates as fast as the video upload. Bye.